Good afternoon, this Tuesday, March 17th. Happy St. Patrick's Day to the Irish ones out there. The grain trade, well, not so happy. Corn and wheat struggling again today after yesterday's selling, while soybeans try to bounce today. And as you've heard already, last night, President Trump in the afternoon speaking was that he only delayed the Chinese trade talks for a while because he's busy with the war. Today, he put a finite number on that, about 5 weeks out. So with that, the soybean trade did see a modest bounce, but not much of a bounce for that, as the bears continue to moan that they don't think China's going to buy these beans. And that's why the trade nature is so negative. And of course, I'll follow up on this here in the charts, kind of plot this out. But let's keep in mind the Chinese last November, without a signed agreement, they purchased 12 million metric tons of soybeans inside of 60 days, when all the bears said we'd be lucky if they get it done by September 1. And to top it off, they did it premium Brazilian beans by $1. Again, same situation. So the bears are almost sure of themselves that now that this has been delayed, they're upset with the trade with the war in Iran, that they're not going to buy these beans. There's one prominent one out there that says, well, at best, they'll buy 3 million metric tons of the 8 million metric tons. Well, keep this in mind. President Trump right now, if he's delayed till 5 weeks and gets there, he's not going to show up as President Trump. He's going to show up as Emperor Trump, given what happened in Venezuela. He got control of that oil, probably taking over Cuba now shortly. And at the same token, Iran will be in the rearview mirror. Do you really think the Chinese, even though President Trump doesn't have his initial way of putting tariffs on and hammering the Chinese, do you think they're going to want to make him upset? He already has the Agricultural Celebration Day coming up on March 27th, where they'll release the RVO and SRE expectations. But at the same token, the Chinese, it may be after the March 31st acreage report, but the grain trade will be heading into that spring rally period where we kind of get these little spikes in April, May if weather isn't, quote, just right. And so with that, the bears, they have the upper hand since last week when he made that announcement, but they don't control this market. And by the way, crude oil today, still hovering in the mid 90s, not exactly falling out of bed. So let's get a look at the charts. Okay, soybeans last week, the way they produced their move, we had our wave 3 high, and then I've been looking for a wave 4, thinking there was a dip and there wasn't going to be a 4. Well, we have it. And now from wave 3, we got that standard A, B, C decline. Now, whether it's completed or not, we'll see. 50% retracement was hammered overnight on the opening tick on that bounce after Trump's talk, but it didn't exactly run away. Today's settlement was not exactly exciting, and I wouldn't be surprised if they want to go a little deeper in here to a wave 4 of about 62% retracement. And isn't this cute? Wave 4 needs to stay above wave 1. But we can do a full 78% retracement down to the 1091 range, stay above 1085, and the 200-day is climbing, currently at 1084.5 today. Now, I'm not saying we're going to go that deep, but it could occur into March 31st before Trump's visit, and then get our final lift. And now keep in mind, wave 3, the wave 5 of wave final 3 could be a fifth wave failure and just a retest of the 1235, 12 possible 50 range. Doesn't have to be a full extension to a new leg up. And then, of course, then we get the wave 4, maybe into fall. This fourth wave pullback, could be farther out here or into spring for another final up. But for now, beans, yeah, probably going to be bearish here on that March 31st acreage report. New crop beans, which the spread favored as they unwound July over November today. But I would be getting your hedges on. We have those short-dated November new crop puts on for 50%, and then we have, I believe it's a 15% sale at 11.44 on the board fixed price. And so with that, beans, maybe a little more further damage. We go to the 2-hour continuation chart. You see the same action here at the 50% retracement. The A, B, C, if C is twice the length of the initial wave A break, that would line up right with 62% retracement at 11.22, 11.23. So wouldn't be surprised if we see a little bit of chip away here again before turning back up. On bean oil, today's news, exciting as it is, did not take out a previous day's high because yesterday was so damaging. You had to be limit back up to recover it. So that was likely a wave 3 high last week or a week before on that bean oil explosion into price near 70 cents. Likely working a fourth wave pullback in here. And again, this might take until March 31st. We'll see. March 27th, of course, is Celebration Day. But by that time, the RVO SRE talk will be likely spilled out of the White House, and it'll be a non-event, so to speak. If you're getting value from this video and want more, just check out our daily newsletter. Each morning, we send a market summary to start your day, plus deep dive analysis, trade alerts, breaking news, and videos just like this. Whether you're a farmer, trader, or just tracking the markets, it's a great way to stay ahead. Start a free trial by scanning the QR code on screen or clicking the link in the description. Call us at 701-222-0221 or visit heartlandinvest.com. Corn. Well, corn is the one I'm friendly on, and you should be friendly on going into the crop report March 31st. And also China to say all hail to Emperor Trump when he arrives. Probably going to be buying some corn because they have so much bad quality corn. This ABC fourth wave, I think, is going to hold above wave 1, hold the 50-day moving average, and likely find the support in this 445, 450 range before we start another rally. And this is the one, of course, that can catch everybody's surprise on December 31st, because if fertilizer is short for your Johnny-come-lately buyers in the urea, they'll switch from corn to beans, and they'll leave the corn acres behind and go just to use it on the beans for the urea. And that's where these corns could surprise us, maybe come in at 93 million acres. We can't be having that, especially if the units applied to the crop is going to be restricted as well. That's not how you get these wonderful trend line yields as of last year, certainly not the years prior. 7 years in a row, we couldn't get over 180. Last year, we finally did, and some of us question whether it really was 186. That said, as the possible basis starts to tighten in April and May, as it typically does when everybody heads into the field, that could also be a sign of the crop was smaller than last year. We certainly have a lot of people sold all their corn in this range here, and it's just be normal for corn to head on higher, leaving everybody in the dust and possibly letting July corn get close to that $5 range again after hitting the upper 480 last week. New crop December corn, I think we're going to see that near 510, 5.25 yet. Kansas City wheat. This is the July contract we'll just do a quick look at. We had our low in October. Took a long time to play out 1, 2, and then, of course, until 3 got underway, we could subdivide the pieces out of it. But still, wave 3, you can see wave A, wave B, last week's high. That would have been Sunday night's high. And, of course, that followed through from a worthless outside day up Friday. Nobody cared about the freeze yesterday morning. Put the high in, and now we're going to fall as the heat builds into the end of the week. And somehow we'll get a wave 4 in here, I believe, somewhere probably in this 590 to 560 range. And then we'll get our classic seasonal rally, which go look at your yearly charts every year. There's been a rally into mid-April, early May. I think it's 4 out of the last 6 years alone that gives us our wave 5. And like I showed in the weekend hedger, the monthly charts, it just makes sense. Somehow, some way, we're going to get these wheat charts challenging $7. The seasonals still hold up until early May. Now, cattle, crazy cattle. The cattle market finding a low early last week. Live cattle found their legs first, feeder cattle second. So it wasn't feeders are the leaders. And then we turned up as box beef exploding. We're now over $400. Got there yesterday, first time again since last September. And the spread is so narrow as well. It's the tightest with the box choice over 400 since COVID, I believe it is. And they did it with the kills, of course, getting smaller over the last few, I should say last week, I think has been. But nonetheless, they're not passing it out. Last week's negotiated trade was $235. This week, they think it's going to be steady money, maybe a little bit better because the packers are holding it. Cattle on feed report out on Friday, 99% on feed, 99 on the feeder placement because we are now reflective of the Mexican feeder cattle not coming anymore. And that's why we used to see those 92s, 91s, 86s. Now it's 99% of a year ago. And then I believe the marketing's number is around 92.2%. So cattle are recovering. They're above my moving average resistance here at 32. The 32-day hit the 62% retracement. That's why we was talking 234 to 235 resistance. There's a 78% retracement at 237, but if we're climbing this high, they're probably going to take a run at 240. And this 240 mark is going to be interesting, especially with June coming on to this contract, either at the end of this week or the first part of next week. And that's how you're going to see this market likely hold under 240 as we continue to trade active contracts on the continuation chart. And of course, you know my theory: left shoulder, head, right shoulder. Feeder cattle. Let's first look at April feeder cattle. Bottom last week on Wednesday or Thursday morning, I believe it is, at the 38% retracement, just under 341. Today, we breached the 20-day moving average on April feeder cattle, but as you apply it to the continuation chart, that was today's high at 55.30 before it retreated. So tomorrow will be interesting. Open and not do anything and falter. That could be the sign of some hedging up ahead of this Friday's cattle on feed report, or possibly crude oil back over 100 overnight. We shall see. But if it doesn't turn down immediately and holds up, again, we resort back to live cattle. Still the scenario of left shoulder, head, right shoulder, and a lot of mishmash activity. And keep in mind, the May feeder cattle $3 discount will take over either end of this week or the first part of next week, how these charting services will roll. And so with that, still anticipating 360, going to be significant resistance. That's where the March feeder cattle have caught the car. The dog has caught the car for the cash index. And of course, May can stay discount for a while if it chooses to, just like the March contract. Waited until 2 weeks out to finally do some improvement. Finally, let's look at gold. Here is the April gold chart. This is the 39-day moving average. Should have went 40, but I just wanted you to see how tight it runs, 39-day. Playing with it. Now let's go to continuation. This is the 41-day, this blue line. Take a look for yourself how it plays with it. Holding it 2 days in a row. Any more weakness tomorrow, getting under 4,980, she's likely taking a leg lower to the 4,800 range. I just wanted you to be aware of this for the gold players out there, that we are still in correction mode, especially since peaking at the end of January within 3 days, making a low at our 70-day moving average. And where did we stop? 78% retracement. And so this implies a wave C decline, which does not have to be lower than the prior low. C's can come up short in super bull markets. The C can extend if it wants, if it's not such a super bull, but we have the prospects at least pulling back to 4,800. Just a warning shot over the bow here on what's happening. Lower action tomorrow, not good for gold. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.